Good morning, traders. Today is Tuesday, September 20th. My name is Charles, and this is the Pirate Traders live stream. Welcome, welcome. Okay, so what are we looking at here today? Well, last week we had a massive sell-off in the market that caused a lot of excess to the downside. We know that excess leads to balance, so we can't keep going straight down forever. At some point, we have to balance off the excess. There's two ways we can balance off excess. We can either do it with price, which means we pull price back up, looking for resistance to come back down and get continuation, or we can balance off excess with time. Okay, so you can push lower and then just kind of rotate around at lower prices for a few days, looking to either break lower or higher from there. Okay, so that's really my main question this morning. Yesterday, we had a sort of end of the momentum, end of the trend to the downside. We made higher highs and higher lows, barely. Higher lows, and we had the value higher. So that's the signal. The market gave us the signal that it's done with the excess and it's looking to balance. So what kind of balance is it looking for? Is it just looking to go sideways here in a tight range for a few days, or is it looking to push higher? Okay. I will say, to me, my guess is more of a sideways type of day today. The reason being two things. First off, the weak low that we left behind yesterday. Both the low here and the low here are both not good ends to the auction process. The low here was poor and the low here was weak. And both of those are signals that the market needs to come back down and do some more business down here. It needs to repair this weakness. If these weren't here, if these were good lows, I would be extremely bullish this morning. I'd be like, we're going to head up. Let's see what happens when we test this resistance, blah, 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 right? But the fact that that weakness is still there, that is market-generated information that's telling me, Charles, don't get overly excited about the fact that we had higher highs and higher lows yesterday. Don't get overly excited about the fact that value was higher. There is information in the fact that we still need to do business down here. It may not be the first order of business, but there is business that needs to be done down here. And then the second reason why I'm thinking more of a sideways day today is because we have the FOMC meeting tomorrow. And oftentimes right before a big event like that, there's just a lot less liquidity in the market, a lot less people willing to take a bet, take a guess. So you just get a lot tighter ranges and a lot more chop in that environment. And then lastly, the fact that we had a spike up at the end of the day yesterday, and we are opening below that spike. That is the least bullish of those signals. And so obviously, if the market was looking to repair the excess with price, they were looking to move much higher today, probably we would have opened inside that spike or above it. So all three of those pieces of information, the fact that we're opening below the spike, the fact that we have the FOMC tomorrow, and the fact that we have these weak lows makes me think a day where we kind of rotate inside of yesterday's range is probably more likely. Okay. Now we are opening inside of yesterday's range, so the highest probability for the first hour or two this morning is chop. The market is likely to grind up and down inside yesterday's range, basically trying to decide which way it's going to break one way or another. So I'll be looking for support right around, well, I guess first right around 36.77 and then 36.62 for the market to pop down, find support there, and then turn around and head back up, okay, as part of the chop. And then I will be looking for resistance at about, looks like about 94, 38.94 to push back down. And then if that resistance breaks, I'll be looking for resistance around the base of the spike, 39.04, 39.05. So I suspect for the first few hours today, we're just going to be grinding up and down inside that range between support and resistance. Exciting times. We're in a chop zone, chopping it up. I'm such a nerd. Does this visually make sense? I feel like now that my market profile is so condensed on the screen, I have so little space to work with. Basically, chop between resistance and support. These are areas of interest. I hope that makes sense. Like, Charles, too many arrows, too many things pointing at too many things. What am I looking at? The Shah, good morning to you. Welcome. First comment of the day. Scooball, hello. T. Wark, good morning. David Keene, good morning to you. Chirp is here. Jeremy Jones. Mateus. Jeremy Jones, anyone have any recommendations for a thin, easily portable extra screen with a laptop? Yeah, I mean, they make those for sure. You could also just always get an iPad, I think, and pair them. David Glass, good morning to you. Ryan is here. Johnny, Andy, Knapp, RK Leon, Nor Auto Trader, Philip, David Cooper, John Lash, Caffeine, Chillin' with Dylan. Scooball says, overnight could be a look above and fail. Yeah, of like a balance area, like we're developing a balance area. Could be. I also don't hate the overnight high, the overnight area as like a potential area for a balance area. You know, like that could be the range right there. But obviously way too early to make that call. Oh man, I messed up my drawings. I'm never going to get it back. Fox Trading. Thanks for the sub. Welcome. All right, it's a little bit bearish that we didn't get any kind of counter auction to the upside. Overnight inventory was net short, and we're in a chop zone. So it shouldn't have been that hard to head up and test some resistance above. But of course, way too early to make a call. Just a little bit bearish. What about crypto, Charles? Any ideas? My idea is get ready for pain. It looks like Bitcoin's going to 14. I love it. I'm excited for it. I'm going to just buy more and more. But yeah, once this trend right here breaks around 18.7, down she blows. Next major support, 13.9. Or I guess there's some at 15.8 as well. But yeah, I think it's a great time to be slowly accumulating, to be dollar cost averaging into a long-term portfolio in crypto, not a time to be buying for a short-term return. I think there is blood ahead. Probably for stocks too, but certainly for crypto. Mark, if you didn't have us, would you be doing something better today, i.e. going to a Hamptons estate? Yeah, I don't have a Hamptons estate. I could maybe do a Hamptons Airbnb. But no, it would still be a day I would jump in front of the charts and see what's happening. I would say if by like 11:30 though, nothing interesting happens, it would probably be a day I would bounce. Just because of the FOMC tomorrow, there's a very real chance that the market's going to be kind of boring today. But I would give it the first couple hours and see. Who knows? Especially if we break these lows. If we go down here and we test the lows from yesterday and the day before, if that breaks, it could lead to some volatility. So, yeah, I'd be here. Nicholas, good morning from Argentina. Very cool. Welcome. Good morning. TV and blue shirt. Coop in the house. Shout out to the West Coast homies. Fox Trading. How are you doing with Bookmap? I had a sub for 3 months, but unfortunately, it just clouded my judgment even more. Yeah, so for me, the same thing happened when I started learning the internals. So first, I focused on nothing but the Market Pro. I threw away all my old stuff that I was using, right? All the candlesticks and the Ikamudu clouds and the VWAPs and the, MACDs and the RSI. I threw all of that away, and I started just looking at the market profile. And it took me a while, probably like 6 months before that clicked for me, where it was like, okay, I get it. I see what's going on. I see how to read it. I can see an edge here. Okay, this is a valuable tool. Then I brought in the internals, and that took me another, like, probably not quite as long as market profile. It probably took me like 4 months or so for that to start to click. And there was a period of time where I almost gave up on it because the ticks would just confuse me so much. And just get me on the wrong side of trade so often that I was like ready to give up on the internals. I was like, this is a waste. It's just unnecessary extra information. But by forcing myself to stick with it and keep going and not to get upset when it confused me, but recognize that I just don't yet have the skill to interpret the data. Because I gave it time, it then became a really big edge and is now a big part of my trading. So I'm kind of at that same place with Bookmap where I'm not really getting any trade ideas or any valuable information from it right now. And it is kind of a distraction. Like there are times I want to get long and then I see like a big note of volume or something and I'm afraid to. But I believe that if I stick with it in a few months, it'll give me a big, edge, a big advantage. But I am definitely still in that learning curve phase, where it is giving me a lot of mixed signals. But what I generally tend to do when that happens is I just stop watching it. I lower it down and I focus on what I know. Scooball, do I have a level at crypto to give up? Boy, that's a great question. I don't actually. I mean, I assume the trip down past 10,000 would start to have me panicking. But after I lived through the last one, it would take a lot to get me to give up on Bitcoin. Because what you have to understand is the journey that I had the last time. For those of you that don't know my story of getting into trading, I first got into trading crypto back in 2017. And so I was trading all through this. Okay. And on this big move up, when it made this big move, I made a fortune. This was where for the first time in my life, I was really considering quitting my job to become a trader. Because I just did so well from basically 10 to 20,000. I was exchanging Bitcoin for altcoins and back and forth every day, day trading, while I was at my other job. It was insane. I had no clue what I was doing. I literally was just guessing. I was going based off of the logo that the crypto would have, or I would look up the team on LinkedIn, and if they looked legit, I'd just buy it. I had no clue what I was doing. I was just gambling. And so then I had a very long, painful experience on the way back down the following year because I just kept buying. Like I just kept buying more and more and more and more. And every time I would get a relief rally, I wouldn't take profits. Like I would buy in here and I'd get this move, but I wouldn't take profits. And then I'd buy again and I'd get this move and I wouldn't take profits. And I'd buy again and I wouldn't, and I'd buy again and I wouldn't, and I'd buy again and I wouldn't. And man, it just like kept punching me in the face over and over and over again. And then I finally gave up on Bitcoin right here. Boop. That break, when it moved lower down here to 4,000 again, I was like, fuck Bitcoin. It's going to zero. I hate this asset. I'm never going to mess with it again. And I completely gave up on it. And in this point in time in here is when I decided, okay, I've really got to learn how to trade. I've got to learn how to read charts. Let me just peek on the ES real quick. Yep, still chopping. I got to learn how to read charts. I got to learn how to understand when to take profits. When is the move over? Where is the best point to get in? I started playing that game in here. I started to learn to trade. So then in here, this whole time, I was accumulating Bitcoin. My goal was to accumulate at least one Bitcoin under $10,000 because I was absolutely confident it would come back to all-time highs again. I had no idea what would happen once we got there, but I was certain that anything under 10,000 was a good deal because we would eventually come back to 20,000. And you can see, I mean, it was a year and a half of like, I'm right, I'm wrong, I'm right, I'm wrong, I'm right, I'm wrong, I'm right, I'm wrong. Oh no, what am I going to do? But I just kept accumulating. And then when we got to 20,000, when the market finally pushed up, boop, boop, I took profits on half. So I got back all the money I put in. And from that point on to this very day, all the Bitcoin I own is free. I already got my cash back out on the move from 10 to 20. And so all the Bitcoin I own is completely free. And so who cares if it goes to zero, right? It doesn't even cross my mind. So that is the exact same way I plan to trade the next big macro move. So I plan to sit here as it comes down and it'll do the same thing it did before. We're about to get this capitulation. We'll get the fall and then we'll get a slow grind, maybe even over a couple of years sideways. And you know what I'll be doing? Accumulating the whole time, waiting to get back to 60,000. When we get back to those all-time highs, I'll take profits on half of it, which will have me in the green because 20,000 to 60,000, you triple your money. So I'll take half my profits and be sitting on nothing but free money to see if we can continue higher. I know it's going to be painful. I know it's going to take a long time. I know I'm going to feel like I'm wrong quite a bit. But I also know to ignore the noise, ignore what people say, and focus on the TA. I learned it from experience. Malcolm, you need to learn there's no such thing as house money or free money. Well, that's all in the eye of the beholder, my friend. I don't need any of the money I have in crypto. I don't need it to pay my bills or do anything. If I hadn't have spent it buying Bitcoin, I would have just bought, beers for me and my friends. So to me, the fact that I got my cash back, and by the way, I took a bunch of profits on the way up, it's free. There's zero risk to me. I got my money back. Now, you could say I'm risking the loss of what I could have if I took profits right now, but that's just not how I look at things. I'm not worried about the money I have right now. I'm worried about the money I'll have 10 years from now. And I'm willing to risk it right now to have more later. Johnny, can you trade Bitcoin with the market profile like you do the ES? Yes, of course you can. Any financial asset you can look at in the market profile. Another way to think about it is like anything you can look at on candlesticks and you can trade with candlesticks, you can trade with the market profile. It's the same thing. It's just a different perspective. It's just a different way of looking at the same information. Although I will just note that one edge that we have with the ES specifically is all the years of experience that Jim Dalton had basically developing the strategy. So knowing what is excess and what is not. I don't know that on Bitcoin. I also don't know what the time frame, like the ES you want to trade on 30-minute time frame. I don't think Bitcoin is the 30-minute. I would say it's probably the 4-hour. So it's little things like that you would have to figure out for yourself. You know, what size should the TPOs be? What is good excess and not good excess? Stuff like that. But the tool is exactly the same. Novice trader, forget about trading. Do you believe in the technology in the long run? Do you think that it will change how we spend money? As far as crypto, 100%. I think, crypto for sure is going to be the future of money. Whether Bitcoin survives, I have no idea. It may become like a Fed coin. It may become like a government version of digital currency. But I think being able to transact person to person through the internet without any third party making money off of it, this is the way. Chop fan. By the way, Choppin' fan, you must be having a great morning this morning. This market's going nowhere. Yeah, of course. These 50-50 guesses are the best. Fox trading. What about trading commodities and oil? Yeah, I got no problem with that. I don't personally trade them, but my thought is, and again, this is just my own experience. I think it's best if, at least in the beginning, before you become profitable, if you pick one market to trade. So if you want to trade oil, just trade oil. Or if you want to trade, Bitcoin, just trade Bitcoin. Or if you want to trade, indices, just trade that. Like, pick one thing and become an expert in it first. And I just picked ES as my thing. CCT, is Bookmap good for scalpers? I would say that's the number one customer base, is scalpers. Scooball, when will you get bearish? Not yet. We got a big notice of support between 64 and 56. So pretty much I got to see us break yesterday's low before I'll get bearish. because they could easily find support and turn around and head it right back up through that opening price. Anywhere inside this node, they can go, that's good, boop, and head right back up. That's what makes a chop zone tough. But if we, repair these weak references and then get new selling, I'll get bearish instantly. Oh, bearish to test yesterday's low. Yeah, still not there. Fox Trading says, I've been trading for maybe 4 years on and off, feeling like I'm finally getting even. Not profitable, just kind of 1-1 win to loss, laughing at myself at the beginning for thinking it was easy. Yeah, it's the weirdest thing, man. I will never understand why this is the one area of life where people behave so strangely. I mean, I got friends that if they're going to buy anything, they're going to research the living heck out of it. If they're going to buy a toaster on Amazon, they're going to look at every toaster available. They're going to do their research. They're going to read the comments. They're going to, research the company. Like, they're going to make every possible informed decision they can when it comes to buying a toaster. But if you say to them like, hey man, you should buy this stock, it's going to go up, they just go buy it instantly. Like, they're just like, yep, I'm going to go buy it. And it's the same thing when it comes to like learning to trade, where people, for whatever, like, you can make as much money as a day trader as you could make as a doctor or a lawyer or something like that. And yet people assume it should be much easier than those things. Like, oh, I mean, of course you have to spend 10 years learning how to be a doctor or learning how to be a lawyer before you make lots of money. Of course. But then to expect somebody to have to put in that kind of time at trading, well, that's crazy. No, I should instantly be good at this. It's very funny how we think. But I would say if you're at that break-even point, that is proof that you have what it takes. You can be a good trader. It's probably mostly psychological at this point. It's probably not your market analysis. It's probably your psychology and your risk reward, your risk management. If you made little adjustments to that, you'll probably become more consistently profitable. Armando? Is there a glitch in the matrix? Would you say that Bookmap is great for scalpers? I would. I would say scalpers are the number one group of people that use it. I can't personally comment to it because I don't scalp, but they love it. It's their favorite. Timothy says, that's me. Well, what do you love about it, Timothy? How do you use it as a scalper? Morning, Chris. One punch, good taper at the high and the low. This is typical chop scenario. Exactly, yes. Very, very common. One way to think about chop is that it's like half the people think it's going to go up and half think it's going to go down. And so, but the moving up and down doesn't change their mind, I would say, is how to think about it. So it's like the further it goes up, the less and less people there are to go long. There's only, if only half the people think the market's going to go up, some of them get long here and here and here and here. And eventually there's just no one left. You've used up all your 50%. And so then the market turns around and it comes back down. And then the people who think it's going to go down, they start to sell until you run out of them. You've used up all your 50%. There's no one left. And then it does it again. And so you will very commonly get taper at the higher low because that's where you run out of people and you have to start going the other way until you run out of people and then you go the other way. Whereas in a typical market, in a market that's not in a chop zone, the movements can change the number of participants. So the market can push up and that will convince new people to go long up here. But in the chop zone, that's the difference, is that you don't get those new buyers. You just buy until you run out and then sell until you run out. And that's why it's best to wait until the chop breaks and a decision is made. Unless you're a scalper. Screwball, in my mind, today was net short overnight and instantly found resistance at the overnight low. That is That move lower wasn't a chop. So you're saying that this is resistance for further downside continuation? I can see that argument. I think it's perfectly fair. I just don't want to join you until we break yesterday's low and get new sellers there. But then I will agree with you 100%. I just need one more piece of market generator information to convince me because of all the things I talked about at the open today. Because higher highs and higher lows means that downtrend is over. It means that momentum is, well, likely over. And that the higher probability is sideways or higher today. So I wouldn't instantly give up on that idea when we just open and start going sideways. Like that would be strange to instantly think I'm wrong and we're really going lower today. So I'll need to see new information to change my mind. I'll need to see us push below yesterday's low and then find resistance. And that resistance will tell me to look for continuation. But you could be absolutely right. It's just too early for me to make that call. Screwball just to test yesterday's low. Yeah, see, that's just not a trade I'm interested in. There's no way for me to measure from here the probability. I mean, I would certainly say it's better than 50%, but it's just I don't know exactly how much of a chance I have of that trade working. So that's just not a trade that interests me. Like I said, they could just as easily come to here and then head right back up. And if that happened, I would feel like a fool. I'd be saying to myself, why did I guess the market was going to go do something before I knew? It's fine to think a guess. It's not fine to risk capital on a guess. Ask me, so do you stay completely out of trades and choppy days? Yes, sir. As it says on the banner. I do not enter trades in chop as it is impossible to predict when or where the market will reverse. Even if I think we're heading down to repair these weak references, if the market could randomly stop and reverse anywhere, then that's not a good trade. This would only be a good trade if I was confident that the market, if this resistance told me the market has to go test that. Right now, I do not have that signal that the market has to test this. It could just as easily find support here and turn around from there. So I'm willing to think about it as a potential idea that we might go repair these. I am not willing to risk money on the idea. I see that as gambling. But that's just me, just my way of looking at my trades. If you're short right now to repair that weak low, that's perfectly fine. I'm not against that. It's just not how I look at markets. I only enter trades when I am confident that the probability of the trade working is in my favor. Otherwise, I just watch and wait until I do see a chance. Invictus, until the money is screaming at you to pick it up. Exactly. That money is not screaming at me. That money's like, come on, Charles, maybe. Take a little risk. It could work out. That is not screaming at me that this is a great setup. Now, what would scream at me? If the market pushed below that level, came back up, and there was no resistance there, and it started to push through, and I looked at those ticks, and those ticks are going higher, well, now it's screaming at me to get long. Or if we push down to there, and then we get resistance, and those ticks are pushing lower, well, now it's screaming at me to get short. But in between is just a guess. Jeremy, I just referenced my data on a strategy I am tracking and trading with small size. Just highlighted all the Tuesdays and Wednesdays that have been FOMC meetings and rate days. All trades have been losers. That is so interesting. Well, there you go. Right there, you've got an edge. 2 days before the FOMC, take a couple days off. It's not your market. But what I love is that you can track the data, you can check, and you can see. And then you can give yourself an advantage. Right now, there are other traders who are trading this that are losing money, and they don't know they would have a statistical advantage by just stepping aside on these days. But you know. And that's why you'll beat them in the long run. Mark, using your entry parameters, how many trades do you take on a day? Understanding every day is different. Yeah, every day is different. I would say anywhere from like 2 to 5, that range. I like to get in a trade that I plan to sit in for like a couple of hours. I try to grab the bigger moves and not try to faff around with little, 5-point moves here and there. Just because that's how I get chopped up, Even I can be right and still lose money. It's ridiculous. So patience has been the most valuable tool. Cortman, then fade those losers? No. See, what he's describing is because the nature of the market is different a day or two before the FOMC, right? It's totally different participants. All the big players are gone. Okay. Nobody with, real money that they manage for other people is trading today. It's just algorithms, which trade off of a pre-decided set of parameters, and short-term traders who are basically just gambling, who are just guessing and hoping it'll work out for them. Those are the majority of the participants a day or two before. And so what he's basically saying is he's not good at understanding what a market is doing when those are the participants. He can see he does better when there are larger time frame participants who are controlling the movements of the market. And so he has an edge by taking those days off. He would have no edge by just inversing himself because he could be just as wrong both directions. It's the fact that there are markets that his brain is good at recognizing the patterns of and can understand and can take profits. And there are markets which are more difficult. And so recognizing the difference and choosing to only participate in the markets where you have an advantage, or even just size-wise. So like he might choose he's going to keep trading on days leading up to an FOMC, but he's going to trade with much smaller size. So his risk is less, right? That's the advantage to tracking the data and looking at it on paper gives you, is you can do the same things, but in a more effective way. Kathy, what's your trade plan for the FOMC decision tomorrow? It's always the same. I'm flat as the FOMC news comes out, and I'm looking for quick trades, like, not waiting around. Just, can I jump in? Can I grab 10 points? Can I do this? Can I get out? But we'll talk about it tomorrow. I'll do it live, and I'll explain what I'm doing in real time. I would say FOMC meetings is like the one time I gamble. Global trading. When you change your banner to say feeling bullish or bearish or trending higher or lower, does that mean you just bought for yourself? No, it means I'm looking to buy or sell. Sometimes it does work out that way. Sometimes the second I see an opportunity, I buy and then I click over and change the banner. But most of the time, no. Most of the time, the banner changes first, and that's when I'm placing an order. So like, let's say, hypothetically right now, I decided I was bearish. I would put up the bearish banner, and then I would put a limit order in and a stop for the trade. And I'd be waiting for the market to come back to resistance to actually get into the short. All the banner does is tell me what to look for. Should I be looking to go long or short? But I'm still always waiting for a good entry. An entry where I can have minimum possible risk with the highest probability of success. Global trading. Could you give us a clue? Like a secret code? Giving you a secret code would be the same thing as saying go long here, and it won't help you. It won't. I promise. I mean, the truth is you have to decide. Do you want to manage your own money? Do you want to trade your own money or not? If you want to manage your own money, if you want to trade your own money, you must be the one to decide when to get in and out of trades. It's the only way you'll learn. You will never learn from other people telling you get in now. That's not how life works. Can you imagine a basketball player who has to have his coach yelling at him on the sideline the whole time? Okay, shoot now. Okay, dribble. Okay, pass it to the other guy. Okay, this is the moment where you dribble. Like, that's not how life works. You must learn to do it on your own. But if you don't want to, if the pressure and the anxiety and the uncertainty of making your own decisions and managing your own money isn't right for you, just give your money to a professional, or better yet, just buy index, buy SPY and hold for 20 years. But if you want to be a trader, you should not want other people spoon feeding you trades because you'll never learn. You should want them to give you the seeds for you to learn to look for your own trades. So you should want them to say, I'm bearish now, I'm looking to go short, but you should want your brain to be the one that decides where you get short, what position size, where do you put your stop, where will you take profit, all of those type of things. That's what trading is. Armando, on Bookmap, do you know what the large red-green dots are? Yeah, so the red and green dots is the volume that's trading, that exchanges at that level. And it's the delta between the two. So if it's green, it's more buyers than sellers. If it's red, it's more sellers than buyers. And the size is how much of each. I've got my settings set right now so that it only shows the dots with like 150 contracts at least, because anything less than that on the ES, it's not even really worth noting. But I might change those numbers, in the future. All right. Well, unfortunately, no real insights right now moving forward. We are still in a chop zone. If you put a gun to my head and made me guess, I would say it looks like the market kind of wants to break lower. But honestly, if it were to suddenly flip in reverse and head right back up, I wouldn't even be the least bit surprised. So I don't really have much insights to give you moving forward. I would say if we break the initial balance to the downside, if the C period low breaks the B period low, so it gets below 62, I would look for an attempt to repair this weak reference. We left behind it yesterday at 53. So if you break that initial balance to the downside, you can look for that move. But once we get down here to yesterday's lows, you got to wait and see, right? Do we look below and fail and just pull right back up? Or do we push below and get resistance there for continuation lower? You'll have to wait until we get there to find out. Otherwise, I suspect we're going to have a balance day inside of yesterday's range. It will likely be very difficult to call reverses. and very, very boring. Good times, everyone. See you tomorrow morning. Thank you, Novice Trader. Yes, if you wouldn't mind smashing that thumbs up on the way out, I sure would appreciate it. Only got 64 likes today. Hate the chop, don't hate the pirate.